Why is natural gas falling? You might not think about natural gas if you're, new to trading, new to financial markets in general, as being that important of a market. But just as a quick aside here, before we dig into the reasoning behind natural gas's recent fall to year-to-date lows for sure, but lows going back the last few years here, the lowest that we've seen since the pandemic, early days in 2020, natural gas is considered by many, the second most prominent energy in financial markets. It's usually right there with crude oil. And in terms of commodities trading, it's right up there with your gold, silver, and crude oil in terms of markets that people keep an eye on and markets that people are trading, though I must disclaim that it is not nearly as voluminous as those three markets. And though we're going to compare it to crude oil today, it tends to be a lot more volatile and have a lot less liquidity than that market, but still catches a lot of eyes and ears and a lot of trade tickets at the end of the day. Now, natural gas has moved down to $2 recently, 3-year lows. And as we'll see here in a second, that's pretty much the lower bound for the last decade plus of trading. Why is it down there? Well, the nice piece about a market like natural gas that might seem complex and man, I don't know anything about that. If you have a handle on crude oil and how commodities in general work, which is to say that they're primarily run by relatively simple supply and demand dynamics. And when I say relatively simple, I'm speaking to, a stock that has these different departments, these different people, these different revenue drivers all over the place that can make it very complex. And then you throw one stock into a whole stock market, what's driving different sectors and different companies of that overall market higher and lower on a given day can be very, very complex. In the world of natural gas, it really is supply and demand, and supply is just that inventory of natural gas that's getting taken out of the ground. And the demand primarily comes from heating buildings. In recent years, natural gas has become a huge part of electricity here in the U.S. And when you think about that supply and demand, you can see here that the reasons for natural gas's fall are relatively easy to get on board with. We've had warmer weather throughout the most recent winter. I saw some quotes as, on average, more than a degree warmer than usual day-to-day temperatures over the last winter. With those warmer temps, less need for heating, less need for that natural gas energy source, like we say, and that's actually one of the primary uses of natural gas. Though electricity is growing, heating large buildings and being used to heat water, to cook, and all these different things that's usually quoted as the number one use of natural gas. And their reason two for the recent fall is huge inventories we've been seeing over the last 12 months. And as we'll get to here in a second when we bring up the chart, you'll see that the ebb and flow of natural gas prices can be very similar to the ebb and flow of changes in inventories there. And what I mean by that is, we saw a big rally in natural gas's price in about 6 to 8 months ago. And whenever you see a big run up in that price, all the people who can produce natural gas, who can take it out of the ground and refine it, they think to themselves, we need to be producing more of this stuff. And they start to really kick that production into gear. And it usually takes a handful of months for that production to catch up. And so we've been seeing that oversupply coming from that price run up, now driving down the price, like I say, 6 to 8 months later, and then finally reduced demand. And this is a mixed bag here. I saw some people online quoting this around the potential crisis coming from banks and different offices and everything else, potentially needing less natural gas for these different, energy sources around big office buildings and what have you, given the potential of an upcoming crisis in that sector. But also, what I saw, and I tend to believe more in, is when we had the energy prices running up about a year ago, both natural gas and crude oil, very high in price, a lot of buildings around North America and offices and companies made protocols to use energy more effectively, one, for the social reasons, but two, and usually more at the heart of capitalist companies, is we can't be paying all this money for these expensive energies. And so reduced demand just from effective uses of this energy, all these things combining to bring natural gas to its lows for the last 3 years. And we'll see here in a second, looking at the long-term chart of natural gas, that these are lows for pretty much the last 20 years of trading here in natural gas. But before we get to that, I do want to stay on the energy topic and relate this natural gas to crude oil, because you'll see here, this is the chart of crude oil's price to natural gases and where we are currently at about 40-1, given that crude oil is at $80, natural gas is down at $2. That's the largest we've seen, the biggest gap between these two energy sources that tend to be positively correlated in 10 years. Is crude oil becoming the energy du jour? Is it taking over some of the space from natural gas? Well, anyone who knows about the energy space knows that crude oil's primary use is in transportation, be it vehicles, be it diesel fuel for trucks or jet fuel for airplanes. Not a lot of crossover in the use cases for this, but you can see this is definitely an extreme, given that this spread tends to trade between 10 and 30, especially over the last 10 years or so. And so I wanted to take a look at what natural gas and crude were doing the last time we were at such an extreme, which was the start of 2012. And you can see that we were actually, sorry about that, dropped the mic. We were actually at pretty similar levels in terms of both natural gas and crude oil here. You had a crude oil market that was $110 and a natural gas market that was $2. And this is, just as a quick aside, a really nice part of trading commodity markets, foreign exchange markets, and interest rate markets, pretty much anything that's not a stock, is the fact that you can dig into the last 10, 20 years of history in these markets, and you're going to see relatively similar prices. And that's, the great case for trading mean reversion in markets like that. But that aside, crude oil was about $30 higher than where it is, and natural gas was about where it is now, which makes me look at the current landscape where natural gas is about $2, pretty much the same price there in 2012 at the highs of this crude oil to natural gas spread. But crude is only at about $80 now. And on top of that, though the correlation between these two energy markets is positive, it's only historically been between 0 and 0.3. So I don't know if I would take a look at this as a potential pairs trade. One, because the correlation is not robust enough. You usually want a correlation in a pairs trade of 0.5, 0.6 or beyond. But two, as well, if I was looking at not just trading natural gas, but adding a crude oil component onto it for, a diversified pairs trade here, and I was looking to trade that extreme, buying natural gas and shorting crude oil here, seeing that the last time we were at a similar extreme, crude oil actually ran up north of $100, and now it's currently at 80. I don't know if trading crude necessarily gives me something. So wanted to give this point of view to kind of look at the potential for a more diversified trade as opposed to just trading natural gas. But actually, this is one of the rare occurrences where I think just staying in, if you're going to trade natural gas, staying in the natural gas only market might make the most sense, as the pair here would tend to complicate it. And though it is an interesting extreme that crude is trading at 40 to 1 the first time since 2012 there. But getting back to just natural gas, you can see that these $2 lows are the levels that we've bounced off of in 2012, in 2016, in 2020. And that's funny that it's hitting at about a 4-year interval at this point. I don't think there's anything of note in there, but just interesting note nonetheless. How low can this natural gas market get? I mean, it's looking like, historically speaking, this is as low as it's gotten. But keep in mind that this is a market that primarily trades in futures, and with futures, there is a when component to this. It actually becomes, in instances like this, the toughest component of it. A lot of people will look at trading VIX or volatility around the stock market and see that market, kind of similar to this chart, sees big highs, big lows, but tends to, at some point, come from those highs back down to a more central number, or come up from those lows back to a more central number. And here you could call that, $3, $4, $5. And natural gas, it's gotten up to double digits. It's come down. It's gotten all the way down to $2. It's come back up. But you can't just inventory long and short positions with the futures market, because you'll see that the term structure for natural gas futures is going to be ascending over the next several months. And so what that essentially means is, if I buy here in April, natural gas futures for April at $2, thinking that they will get back to that $3 average, $3 or $4. I'm just using 3 as an exemplary number. If that doesn't happen by the end of April, and I need to roll into May, maybe the May futures are already priced at 2.25, and the June futures beyond that are priced at 2.50. And so if I buy any of these futures markets and the move higher doesn't occur in that time frame, and the whole time I'm rolling this market up and I'm losing more of that move, and let's say these are all example numbers again, that the futures for natural gas in April of next year already priced at $3, well, I didn't witness any of that upside. So keep in mind, we are at this extreme. It's this level that natural gas has bounced off of historically here in 2012, in 2016, 2020 as well. But there's a timing element that can get tricky here for natural gas.